Hello, everyone. Thank you for coming back to my channel. Today, you can't see my face because once again, I my damn laptop and the camera is just being a little sus right now. Okay, I don't have my Windows laptop with me, so I'm just gonna, and I can't use my Apple because it's lagging. Whatever. That's not the point. I know you see the title. I made over $500 today, and that is the most I have ever made. And I'm just gonna be transparent here and just show you the trade that I took. So I have been practicing for a very short while liquidity sweeps and how to place trades on them and whatever. And I tried that today and I got over a $17 move. Okay. This is my Webull account and let me show you how much I got today. Just to be real so that, this is still an ongoing thing for me. Okay. I don't want this to seem like, you get only one big wins. I would love for this to be consistent. Okay. So I took 2 trades today. I took one early in the market, a market open actually, and I want to show you those trades. So let's head on to TradingView. First trade I took. So this this is, you see all these lines here. Yeah, all these lines were proper risk management. Okay. So this is my trade. This window right here, that's the trade I took. Okay. So when we look here, I wish I can. Okay, when we look here, market open. We're at the 3-minute candle. I see what price is doing. And as I'm looking at this as well, I head over so you guys know the confluence. You know what, this is my watch list. So all these levels right here on this area, these purple levels, those are my key levels, my weekly key levels that I drew for the week. Okay. So keep that in mind because these are the confluences that matter. Now, on this area right here, I saw that price was at a low. A low, then a high. So what I marked, which is so crazy, I marked liquidity at this moment right here because you have a high then a low. I hope I got that correctly. And once I saw price over here, to me, this was liquidity that got swept. Okay. You see how it passed this line here, this green candle, and there were a bunch of orders filled at this bottom area. At this bottom area right here, a bunch of orders were filled and it stayed above. So that's telling me that we're going to have a bullish run. Okay. So I also see, so hold on, let me put this in the 3 minutes as well. So on this area right here now, I get in after this price goes up. And mind you, I know that price is really volatile today. So I was just trying to make the best of the moves. So after this large green candle, this is when I got in. Sorry, put that for a buy. This is when I got in. I got in because of how volatile price was. I knew that, I don't know why, but I was like, you know what? We're just going to go in for a 1 to 3. A 3 to 1, sorry. So I put my stop loss at price low, price's previous low. It could be either or, to be honest, but I'm pretty sure I put it at this low. And I waited for it to get a bull run all the way to 3. Onto 3 ratio. I've been saying a 3 to 1 ratio. Okay. So you see that right there. So I'm trying to take profit here. And because I'm managing my risk and I wanted to, take my profit as much as I can. Let me make sure I get this correctly here, guys. I have three take profits. So I have a take profit for a 2-to-1. So that's why I drew my line over here. This is a take profit. And then a 1-to-1 as well. This is also a take profit. So essentially, I give myself, I can start when I have all these take profits, it's for me to know that I can either scale in or scale out. And I wanted to scale in so bad, but risk management, I couldn't get too excited. Okay. So I let price do its thing. I see, okay, price is going up, price is going up. I wait for price to hit take profit 2. And it does. So I exit out all my positions at take profit 2. And I wish FOMO, it's whatever. It's whatever. It's whatever. Actually, I wait for price to continue to play, I believe. I wait for price to continue, right? And I had my stop loss below this red candle, which, there was no need for me to do that, would have been below here. But I still let price go in, and then I exited out once price hit here. And of course, as I exited out is when price shot up. But as I'm going, price is going down and I'm thinking, okay, it's consolidating. Boom, bam. A whole move. A whole $20 move. Price hit take profit. Okay? It hit take profit, guys. It hit take profit. It hit all take profits, 3. All 3 of them. That was a $14 move. And price continued to go up. So because I saw how volatile price was going up, I was like, you know what? Because price is going up so bad, I have a feeling that the markets are moving to create a liquidity sweep once again. So I now check in the 5-minute. I check now in the 5-minute chart. I see that price has been swept right here. I'm watching out for liquidity sweeps here and here, okay? And I'm now looking for a move to the downside. So I see this happen and I'm like, oh yeah, for sure, price is getting swept. And it's this one right here, okay? So I'm juggling between the 3-minute and the 5-minute, but the 5-minute looks more promising because the wicks are above this price level right there. And then I tried to see if it could also hit this price level right here. And it did. So I see there are like so many liquidity sweeps. It swept this price, went down. No, first of all, it swept this price, went down, wicked, swept this price, wicked, swept this price, wicked. And I'm like, all right, I see. We're now headed to the downside. So I actually get into this early. I got in at the close of this candle, I believe. And what happens? I put in a sell. And I knew that price may not have gone down all the way up because it just went up, all the way down because it just went up. I hope you're understanding me. Just follow me along here, okay? I know the graph looks messy, but it only looks messy while I'm in the trade, not before, because I'm trying to manage my risk level. This was my first time applying liquidity sweeps, okay, with my key levels. So look at this section right here, okay? I'm going to erase all the blue so that all you see are my key levels. So because I'm also trading according to my key levels, I'm making sure that I'm managing my risk properly. So I put in a sell right here. Put in a sell. And I put that for another 1 to 3. But I know I'm like, okay, I can't go in for a stretch right now because price is really price is oversold and overbought in one instance. Okay. So, oh, hold on. This is supposed to be to the downside. I hope I'm not confusing y'all. Okay. So I get in here. Okay. Because this is my price to the downside now that price has gone up. And I believe I put my stop loss to the nearest high. And then I go in, you'll see a 1-to-1. But then I'm also monitoring these key levels. Okay, I'm monitoring these key levels. I monitor all the key levels. Yeah, I think I got out here. So I'm monitoring the key levels here. So that, remember, the key levels are these purple lines that you see here. I don't know if you can tell. These little purple bars, right here, they're not lighting up here, but these purple bars, those are my key levels, my weekly key levels. So that's what's going to help me determine my risk management. So what's also going to help with it is my 1-to-1s. So we have a key level here. Sorry, we have another level here, 1-to-1. We can erase these previous ones because we don't need them anymore. That was for the first trade. Let's get rid of all of them. Okay. So I can have a 1-to-1 over there. And then I have a 1-to-2. And personally, I think I've stretched it all the way to a 3-to-1 because I thought that's where price was going to go. But then I was like, it's already oversold and overbought. So I don't think it's going to go that far. So I continue, but I'm also going off these levels. So I go in for a sell. And we watch price dip once again. I get in again for another $14 move. And to be honest, I was like, this might just be okay. I switch back to the 3-minute. And I see that I've hit take profit 1. And then I see that I also have a key level over here. So remember, just keep in mind that I'm using these both confluences of key levels and liquidity to trade at the same time. And then I see that price hit take profit 2 at 498 as well. And I believe that's where I got out. And I took my profit at that moment. Because of this key level. Right here. So yeah, I didn't use my Heikin-Ashi today. I didn't use my candlestick pattern breaker structure supply demand because I just noticed liquidity at the jump. From the jump, this is the most dollar move trade I've ever caught in my trading career, and it was nice to explore with liquidity and notice all the sweeps. So yeah, let me go back to this. So I would open up these, but it shows my account number, but you guys can see it. I don't even need to do that. So for the first trade all the way at the bottom, I went in for 2 contracts for $1.72, sold them for $2.20. I mean, we could do the math here. So for the first trade, let's just say 220. Let's do math, okay? Let's just say 220 minus, girl, I already forgot, 172. I don't know why I'm doing it by points. Let me just say 220 minus 172. $48 times 2 times 100. Wait, that's not. Wait. Wait, no, I'm so sorry. What was I just mathing at this moment? So I bought price at 172 and sold it for 220. So we say 220 minus 172. Yeah, let's just stick to this. 220 minus 172 is 48. Okay, times that by 2 and then times that by 100, right? Yeah, $96 for the first one. I was actually geeked. I was like, oh, the contracts were pretty cheap. I only got two, okay? And I was low key kind of pissed because I was like, I could have gotten more. I don't understand why I didn't stay in for more. So for the second one, it was 225 and we sold it for 450. So 450 minus 225. 225 to be exact. You can times that by 2, times that by 100. You can see the significant difference because of this type of contract, okay? And the price of the contract. The beta was amazing and the volume was amazing as well. At one point for my first trade, I was up $150, $160, and I could have kept it in, but we don't deal with FOMO over here. But yeah, those are my trades that I got in today. A very nice day. I wish I had my webcam so you could see my reaction. But yeah, those are my trades today. I hope this was kind of easy to understand. If you don't know what liquidity is, it's basically when banks fill orders at a specific price point so that they can get orders at a good price, buy a bunch of them, and sell off or buy off in the market. And that's what pushes the market to go up or down, if that makes sense. So let me see if there are other chances. There were other chances. I actually didn't even check to see if there were other chances to make money in the market today. So I'm just going to go to my normal candlestick pattern. No, I'll go to my Heiken. I'll see if there were any chances to make money with Heikens today. So let's see. We have moved to the downside above VWAP. Let's see if we have any good moves above VWAP. There were no strong candles to the upside for VWAP. And sorry for Heikinashi candles. And I see that price is right at VWAP. So I wouldn't have gotten into any trade or looked for any trade until right here when price seemed like it was going up. But I don't have any signals that I would have gotten into for a trade. Yeah, no, I wouldn't have gotten into any of these at all. Nope. And then let's see if there were any for the normal candlestick patterns. See how price gapped down, y'all, and gapped up. So let's see if there were any points at which we would have made anything. So you see how price is just, yeah, price was dancing around that VWAP. But if there were any chances to take without VWAP, actually, let's see. Let's take out VWAP. So if we had any chances today, there was a quick and cute supply right here. We have a standard 3 candlestick in this moment. Let's see if we would have made a move up to the upside. Make this the stop loss. Would have gotten here. And let's see if price would have gotten in for a 1-to-1. Probably not. Just because of how its price was really consolidating. Yeah. I mean, you probably would have ended still green for the day, but oh, that's actually not bad. At one point, if we had stopped here, you would have been up $9. Yeah, that's actually not too bad of a move. You would have exited at market close for a $7 move, which I think is still a green day. So yeah, that would have been another moment of you to take profit. Who knows? I think post-market price actually went up a little bit. So yeah, look at that. If you stayed in for a swing, probably, who knows, would have gotten a little bit more. But yeah, that's it for this video. Thank you so much for watching. I really do appreciate you guys for watching these videos. I see that I have some new subscribers. Thank you so much for subscribing, liking, and actually commenting. I like that people ask me questions and also give me advice because it helps me be better at trading. And yeah, it's just, I appreciate it all in all. So thank you so much for watching this channel. I hope you have a wonderful night. Stay blessed. God bless. And yeah, I'll see you in the next video.